Hey, how we doing, everybody? All right, excited to be here. Hopefully you can hear my voice and see my screen. Give me a quick, let me know, see where we're at. All right, so can you hear me and see my screen? All right, fantastic. All right, welcome everybody. Hope you're doing well. Beautiful summer. Let's get into it right away. All right, so we've been talking about this planning stuff. The quarter is almost over, man. We're winding it up. All right, you should already be working on your next set of plans for the next quarter. And if summer's in the middle of that and you got kids or you got stuff you got to do, you need to work around that and figure out what your usable days are, right? So this is it. Look, in a nutshell, this is where we are. Okay, this is gone. And we're sitting, what are we sitting? Right here today is the 29th. I got to put some glasses on. Hold on. Don't get old, man. Sucks. All right, so there you are. 29th, last meeting of the quarter. We're going to reset, start over. This is a holiday. I'm sure most of you are going out, doing something. You got to include your plans, whatever they are. I'm planning on being here Wednesday. Figure it out together. All right, so look, what are you going to do with the next 90 days? That's what I want to know. Drop me a note. Send me something. Say, hey, Steve, you know what? I'm tired of watching these DMRs and watching you click these days off. Tired of the bullshit. I'm going to lose 10 pounds. I'm going to do P90X. I'm going to do that 75 hard, or I'm just going to get off my ass and do something. I'm going to send you 5 charts a day, 6 charts a day, 3 long, 3 shorts, whatever. You're going to do the drills. You're going to do the high-low drill we talked about last week. I'm waiting. I'm looking forward to this Friday. I want to know who's doing it and who's sending it to me. The thing is like, maybe you're doing some stuff and you're embarrassed to send it to me. I understand. It's normal. Maybe it's so bad you don't want anyone else to see it. But I'm not going to embarrass anybody. The drills are exactly that. They're drills. It's meant for you not to get it right. It's a developing skill. The idea is it's so tough, right? It's very stringent. You got 5 pips to work with. But if you read through the growth curve of this thing, is that you're going to use a 10 or 15 pip stop when you actually start trading it. But the idea is to be so accustomed to price action that you can come within a few pips of the swing high or swing low. That's what it's about, right? It's meant to stump you because you're trying to improve your skills. You got to be uncomfortable, right? And when you get comfortable with it, then you drop it down to a 3 pip stop. The idea is to be so freaking good that when you're sitting in front of a normal developing market, you can see it and execute at a very tight range. There's a couple of people that have sent me this stuff a while back, and they're using a 1-minute chart, and they can get in within a couple of ticks of the second leg high, man. That's what it's about because they're so used to watching the price behavior. Okay, so look, we got July, August, and September in front of us. I know August is typically slow. School's out, getting ready to go back. You spend time with your families. I understand that, but include that in your plan. That's all. It's not like, are you going to take 3 months off because your kids are out of school? I mean, if that's what you want to do, that's on you. But just send me something. Say, hey, I'm not going to be back till September 1st. Don't just ignore me for the next 3 months and act like you fell off the face of the earth. You guys talk to me every day and I don't hear from you. I always send emails checking on people to see what's going on. When they're sending me shit like crazy, then all of a sudden I don't hear from them. I always think they blew their account or some other stuff happened. And I'm usually right because you can't send me shit every single day and all of a sudden fall off the face of the earth. Unless you got in a car accident, I need to know what's going on with you, man. So look, this is it. We're coming into here. You got 90 days. A lot of this is blocked out, man. You guys know I got married 8/8/08. Okay, I'm going to be doing something here. I have to. That's the rules, man. It's the way we do it. All right, 4th of July holiday. Looking forward to, I don't know, barbecue, cookout, anything. I understand. I'm not like, oh, Steve, you're ridiculous. I'm not like that. I understand. I got kids too, man. I got a family. I understand that. But if you're a single 25-year-old guy and all you have is a girlfriend, and I don't mean it like in a negative light, I mean, if you don't have other obligations, you need to send me something solid and keep it going through the summer. The biggest problem is if you take off 3 months now, you're going to be rusty when you come back, man. All right, so follow up. We talked about this last week, and a couple questions came up. And the reason I even talk about not when one question comes up, but a couple people ask the same thing. So I figured real quick. High-low drill. What time frame should I do the drill? It's irrelevant. Okay, so if you see this on a 1 hour, 4 hour, 5 minute, 1 minute, 30-second chart, this price point right here is going to be the same on every friggin' one of those charts. Doesn't matter. A high is the high is the high of the day. Doesn't matter if it prints on a 4-hour chart, a 1 minute chart, a 2-second chart. Doesn't matter. A Renko bar, whatever the hell you want to use. Doesn't matter. But here's the point. You want to use a 1 minute, 5 minute, and maximum 15-minute chart. Why? Because you want to see the little nuances in the way the candles feed and the way it comes in and the way you get a pin rejection and pulls back and closes the body in a hammer. You want to be able to see that. And you're not going to see all that shit inside of a 1 hour or 4-hour candle. Okay, I want you to be clear about this. I talked about this last week a couple weeks ago about globalizing your levels and look for the entry on there in a micro pattern. This is the base. This is the intraday base. The 1 hour is the directional bias. You're not trading on these charts. You're executing on these charts. That's where the rub is. That's where everybody gets confused and freaks out and told me, I don't like the 1 minute chart. Don't like it. I don't give a shit if you like it. You're supposed to be looking at the 1 hour, 15 minute to get your direction right. Right? The highest high or lowest print is the same no matter what the time frame. And not that it makes me a hero or anything, but I use the freaking board. Pull up the board one day if you're got nothing to do. Pull up the board if you're bored. And it sucks, man. Literally, I would take the high and low off of a price board. It's just big squares of bid and offers. And it looks, if you've never seen it before, it's big blocks like this, and it says GBP USD, and it has the bid and offer like this in 2 squares, and it might say the high or low if you can customize it. And then you take the high, whatever the price is at 1 o'clock, and you take the low, whatever the price is at 1 o'clock, and then you take that number and add 50 to it, 25 and 50, subtract 50 to that. Okay, and then you say, okay, and you can mark on a chart, roughly going to go here, roughly going to go here. It sucks. I mean, you guys have all the stuff. I said, man, when I figured out, I said, man, as soon as I figured out that I could program some stuff and got around some other guys that knew what they were doing, I was like, dude, we got to fix this. Blue box. You got a blue box. It highlights the price at 1 o'clock. Gives you the initial spread of the day. That's so you don't have to sit there and look and count the board. Some people have tried it. They're commenting in there now saying you're right. It does suck. Yeah, but the thing is, technology advanced. I didn't have no blue box when I started the business. The dude told me you take the bid and offer and you add 25 to it at 1 p.m. You take the swing high and the swing low, which is the highest price on the board and the lowest price on the board that printed. Then I used to write that shit in a notebook and then cross it out. Write a notebook, cross it out, cross it out. You understand? It's crazy. So I would write 111.15. Oh, it broke it. Okay. It pulls back off 111.15. Then it comes back through. I'd write 111.22. And you just drive yourself crazy looking at that. It's hard stuff, man. The thing is, you have all the tools. Right? I looked at that and I said, there's got to be a solution to this. I can't sit here and write in a notebook for the rest of my life and try to figure the thing that about that, and what you're going to see on the 1 minute. I'm losing it tonight. I'm pumped. Look, think about the 1 minute and the 5 minute chart. You're going to watch the candles pump and the speed that they move. You know, we talk about outside vector speed. What that gives you is it's a thing called pace of tape. right? It's the way the order flow is coming into the book. That's what you're looking at. So when you see a candle go like this really fast, an outside vector into a level with speed, that's pace of tape. And I'm going to talk about some of this stuff on the book map tonight. What does a big outside bar, pace of tape, quickly moving through? Low volume. It equals low volume. Okay, that means there's nothing in this range of this bar except retail traders. The dealers aren't active in there. They might put a Pac-Man here green to pump it through, and then they break it up here with a reverse Pac-Man. One of the things that drives me crazy in that book is that sometimes you'll see a big red bar, and at the top of the bar, it'll be green. And I was like, well, wait a minute. If price reverses off of that, why did it have a big green bar here? Because the sellers from down here have to turn buyer to get out. This is a no new money volume situation. The volume was already on the books. All right. So I'll talk about this a little bit more. I have some book map stuff I want to walk you through tonight. Okay, so here's the deal. Second question I got. What instrument should I trade? First of all, man, you guys got to stop with all the bullshit. Euro GBP mixed with Mexican pesos. It's bullshit. Stop with all the crap and trade the straight majors. EU, GU, UJ if you like it. Stop with the GJ with the 15 pip spread. Just trade the majors, especially if you're not having success. Stick to the majors. You know, as the markets grew, I didn't have access to all that. I had like 4 or 5, the majors, that's it. EU, GU, Australian, Canadian, dollar yen, that's it. Trade those major pairs. The euro and pound are the best. Euro dollar and pound dollar are the best crosses there are. Spread is affordable. It doesn't get out of whack. It's not crazy. Trading GJ with a large spread and then the market gets a little erratic or liquidity gets thin, that thing opens up like crazy. When you start scaling, this is going to be an issue. It's the cost of doing business, man. If you're trading 1 pip in a commission and they're true to that, or 0.5 in a commission, okay, and they don't really deviate from that, that's what you're looking for. You know, I see people posting this crap. They're trading Mexican peso with a 20 pip spread. You ain't putting 50 lots on a 20 pip spread and be down 10 grand when you open the trade. You understand? Just stop making it so complicated. These things follow a certain pattern. They follow the news. They follow stuff that's going on in major, I don't know, global impact regions. These other crosses, there's some exotic mix. They don't act the same with the news releases. They don't behave the way the majors behave. These pairs are calm. You can follow the news releases. You can pretty much predict what they're going to do on a regular basis. And if you're not, you haven't done the drills. You should be able to know what these things are going to do next, man. All right. So I want to talk about some market structure stuff. All right. Let me see. I got a couple questions here real quick. Okay, talking about GJ, they got a 7 pip spread. Yeah, exactly. So that's a 7 pip spread is normal, right? So what happens when the news comes out? 15, 18 pip spread. So you make 20 pips and you got an 18 pip spread to pay. That means you need the price you're hitting plus the spread to get out. You understand? That's the problem. So if you got 30 pips and it's a 5 pip spread, you need 35 to clear the trade. You got to clear the spread to get out. That's how they make their money. That's why it's not necessary. You need to trade something that's calm. If you're trading a 1 pip spread or a 0.8 or whatever they're giving you at different dealers, and then the market gets a little erratic, it goes to 2 or 3. If you're trading a 7 pip spread and it gets erratic, it goes 10, 12, 15. Right? Remember I told you about the candles, the structure in the candles? They got to get the next bid and offer, right? It's divided like this on the candle. So if you're here, remember I told you it's like this. Price is like this. You get one side and you pay the other side. If you pull the trigger here, you get this. That's a 1 pip spread. If you get a 7 pip spread, it's all the way up here. So you pull here, you get filled here. It's opposite. That's why you got to watch the pennies, man. The rest will take care of itself. This is ridiculous. If you're looking to get short on a close of this and you pull the trigger and you get filled up here, now your stop's here, you're right on your stop. Wasted money, man. Unnecessary stress for yourself. All right, look, let's get right into it because I'm talking. It's already almost 20 after. In 2 steps, 2 things make this next chart useful. I'm going to shut up for 30 seconds. Believe it or not, I'm on fire today, but I'm going to do it anyway. You ready? Go. All right, who got it? Tell me. Tell me what you do to make this useful. Okay, someone said they got the high on 5 pips. Okay, yes, Sean, but not exactly, Shane. Not exactly. Sorry, I didn't mean to use your name. Not exactly. No, you're thinking different, man. What can I do? What can I draw on this chart to make it useful? What can I do to this chart to make it useful to me? All right, here's the answer. Trying to get the pen. Give me a second. Thanks. There we go. All right, awful drawing, but I have a picture. That's it. Now the chart's useful. Okay. Think about this for a minute. Price came up big. The Asian ranges were on top of each other for 2 solid days. Some wide swings. I haven't said this in a while, but I'm going to say it. Bring it in, bring it in, bring it in, bring it in, right? Quiet. Winding it up like a spring. Bringing it in, bringing it in, bringing it in. Quiet. Okay, so now what? Okay, I'm trading within yesterday's Asian range, almost to the tick. I had some wide range swings the day prior after a move up. What's the clue? If you don't know that's the clue, then you need to go back to my very basic class. Right? Now, we take the ideas of where the last place price traded, right? So initially we would have some levels off of here and levels off of here. But then the dealer reels it in tight, winding up like a spring. So what we want to do is we want to figure out where the book flip is going to occur. You ask yourself, where is the last place the dealer on this side of the book, where was the last place the buyers tried to push it up and got rejected? Where is the last place the sellers pushed it down and got rejected? We have our range, right? It's very similar to the Asian range. It would have printed a little tighter in here for Asia. But these 2 Asian ranges, if you go back and look at them, they're laying on top of each other. If that ain't a flat print, then you guys don't know what the hell flat is. If you get Asian ranges trading on top of each other for 2 or more days, and if you look at the one prior, it's kind of trading around there too. That's a flat print. Don't let this bullshit deceive you. They're hitting the stops and bringing it in, bring it in, bring it in, bring it in. Tight spring, bam, exploded. I can't tell you, right, how many times. This is higher level long holders are trap long. They bring them in, they hit the stops, they come back, they bring them in. And then it gets really tight like a spring. There's only 2 things this can do. It's got to take out these levels, right? So they could stop hunt high and get rejected here at this level, or they could stop hunt higher and get rejected here at this level and then reverse. If they analyze the book here and go, man, we need more, then they'll go higher and induce longs. Then they'll rip the market down. And it could even go a 3rd or 4th day. It's typical stuff. Right? So what do you got? You got a flat print, Asian range roughly trading the same for 2 days. Moving averages on the higher time frame, relatively flat. Bring it in, bring it in, bring it in. That's what it looks like on a higher time frame, right? Here's Asia. Here's Asia, trading the same range. Right? Remember I told you eliminate the wicks, get the bodies. Eliminate the wicks, get the bodies. See how this is tightening up? This is tightening up like a spring. Look at the moving averages. This is a 1 hour chart, by the way. Look at the moving averages. Do you need this stupid sideways drawing with yellow lines on it to let you understand that the middle of this range is the point of control? If you can't draw a line straight across and tie up all those sticks of dynamite or cords of wood, you need to have your vision checked, right? That's it, man. Evening Star rejected at yesterday's high. They failed to take out this high. Right? Then look at that. Another Evening Star below this level. So this is the zone. Right? Candle. What does the candle mean to you in the book? It means that there's a couple of stripes at every tick forcing price lower. Now we're staying inside the high range. Okay, tightening up. Now we're tight here. What do we need? We need a break lower and a pullback into and lights out. That's how you get lights out, man. And if it does this, then you need to hold on to this. All right, what did it do today? Same shit. Hook back, continue. Right, hook back into a zone, continue down, hook back. Right, this is a little bit smaller hook back. You can see it here more clearly. There you go. Okay, so now what do I got? Trading in a range for a couple of days. Okay, bringing it in, funneling it in, bring it in, bring it in, bring it in. Tighter, spring loaded. There's my M, hit the stops, mild stop hunt. Why a mild stop hunt? We ain't letting these guys out. We ain't letting these guys out. We got what we need. We came in here, we screwed up the world. We got all these retail traders that think they know what the hell they're talking about. It's lights out for them. We got them. We're holding higher level longs are in trouble because people are trend following and they keep thinking, oh, price went up, it's going to flat print and go higher. That's what everybody thinks, right? That's your A, B, C, D, all your bullshit that you expected to go higher. Oh, it's through the roof. The U.S. is having economic problems. Pound strength, euro strength, dollar weakness. It's bullshit. It's bullshit. Okay, there's your M formation. You need a close below the Asian range. You get it. Okay, you need a confirmation close again, hook back, or close again, hook back. One of these was the entry. Anyone you want. And this is an entry right here. You're below the moving average, and you get the pullback right here. Game over, man. Easy trade, and then just leave it alone. Don't be your own worst enemy. Get away from it. Get stopped to break even and get the hell out of there. Come back in 4 to 6 hours. Okay? Session open, mid-level consolidation, and then reevaluate. They reevaluated, they pulled back, and they continued on down. That happened today. Do you think they're going to spend millions of dollars sitting here sideways for 2.5 days because they're bored? No, it's accumulation. That is accumulation. If it was ever written on this planet, that's accumulation. Higher level long holders trapped, showing longs, showing longs. So there's money to be made in here, but the money to be made is this way. When you get that flat print, you already know what's going to happen. Comes up, flat print sideways, wide range swings, tight, gone. Looks like a bad EKG, somebody about to die. All right, quick summary of that. Absorb the orders on both sides, weigh out the collection of orders. What do we got in the book? Let's take a look at the book. What do we got? Got higher level longs. We're 500 million long, 100 million short. We got to take it down. Right? Larger objectives for these guys. Use the directionals, use these little nuances. If you're not looking at 2 or 3 days, right? I told you 3 to 5 days of the 1 hour chart, squished together, back up and look at it. Don't get so buried in the screen that you see just a little bit of data printing. Back up. Maybe have, I don't know what you're trading, but if you have 3 or 4 pairs you're looking at, squish those down, one on each screen with plenty of real estate, and have 3 to 5 days worth and see what you got. And when you before you sit at your desk, like back up and look at it. Almost like you're looking at, like how far they make you stay away from those museum pieces when you go to the museum, like 5 or 10 feet. Do the same shit. Back up on your computer screen and just like look at it and go, man, look at that. It's flat printing up there. I heard that somewhere before that if they flat print and the average return flat, that they're going to make somebody pay. Don't be the guy that paid. This, if you're asking me what pair this is GU, which is the 6B contract on futures equivalent. And yes, it did this the last couple days. This is still going on right now. It happened last night and the day before, and the accumulation was the day before that. But the whole thing's been setting up for a week or two, right? Higher price, running into the highs, turn flat, wide range swings, bring it in, bring it in. Somebody's got to pay. Who's got the book? Larger objectives, not your objectives. Larger objectives. Do you think that the dollar lost so much value last week and the pound had so much dollar this week and blah, blah, vice? You think that even is true? I mean, I know as a whole, the world's got a mess, but I've been looking at this shit for 22, 23 years, the same stuff, man. I lost track since 1999. And I'm old, by the way. So I've been looking at stuff for a long time. It's the same thing. Year in, year out, week in, week out, day in, day out. You have to understand that it's just, I don't know, a ruse. What do you want to call it? It's a ruse, man. Nothing happened so bad in the U.S. that the dollar lost value. Same shit. Price of gas went up. Anybody around in 2008? Same shit. I remember paying $100 for a tank of gas in a larger vehicle. It's about what it is now, give or take. Right? It's all the same, man. Nothing's changed. The only thing that's changed is the date on the calendar and the year on the calendar. It's silly. If you could just step back and look at the bigger picture and don't be so hard on yourself, you'll understand. Like, man, I get it. That's what you need to have your aha moment, and hopefully it was tonight. Right? Look, the etc. I just talked about it. Larger objective. Look at the moving averages for directionals. 1 hour chart. Absorb the orders on both sides. The dealer is handicapped by he has to buy both sides. In order to deal, he has to buy both sides of the equation. The idea is to show you something on the chart to make you think one way, accumulate both sides of the book, and have a higher number on the top side of the book versus the bottom side of the book. So when he punishes, he doesn't punish himself too bad. There's enough profit to offset this. That's how it works, man. And as soon as you get that through your head, the whole business is going to be easy for you. All right? I've been talking about this stuff for a long time, but it's the same. All right, so we're going to talk about market structure and pattern things, but I want you to see it from the book perspective. So I'm going to walk you through this, and that's going to wrap it up tonight. All right, so we know this stuff, right? This is Asian range forming. All right, so we're trying to figure out what Asian looks like in the book side. Hold on, I got a big question. Let me check this out before I move on. Okay, so the question is when you have, let me erase this. This is a decent question. So question was, I had a multi-day M, I saw it short. Second day we had 3 pins to the low. I had a second leg long. But we had multi-day session, M and W, both sides. Which one should we choose? Okay, you choose the one, and it's a good question, by the way. You choose the one that makes the most sense, which would be after price has been rising for several days and they're consolidating. When price goes up and all the trend indicators are showing higher price, You want to look for the reversal, the opposite. But you have to take confirmed. There was money to be made if you're trading, especially if you're trading GU. There was money to be made trading a W long, but you have to scratch out of that. If you got in right here, you had some amount of money in your coffers before they reversed on you. The thing is, after a big rise, I like it short, right? I had a little saying, right? What is it? After a big rise, the market needs more guys. After a big drop, the market's got to pop. You guys remember those? My early classes? Okay, so then you just answered your own question. After a big rise, the market needs more guys. They're going to drop it, punish, and pick up some orders. After a big drop, the market's got to pop. So the reverse of this would be 3 or 4 days of dropping, flat print, back up. I made it as simple as I could with some stupid little sayings, and people made fun of me over the years for that stuff, but it's an easy way to remember. After a big rise, the market needs more guys. So they got to pull back and get more guys. After a big drop, expect the market to pop. Right? So you had 2 days of drop. What are you thinking tonight? Level 2, 2 days of drop. Level 2, 50% pullback. Okay, 50% pullback against the prevailing trend is going to be up. Okay, so big push level 2. Take level 2 and take the ADR of level 2 that produced today and divide it by 50 or cut it in half. But you don't take anything without a confirmation. They could surprise you and drop. Look, you had this. You had an M structure, you had a push, you had a V pullback, and a further drop. 1, 2. What do we expect now? If they're going to hold true to the pattern, which they don't always do, we know that. Then you expect maybe stop hunt low to induce lower level shorts to continue, and then they're going to maybe do something like this, higher price. You could take this wing and cut it in half, 50%, you have a rough idea where trade should go off for continuation, right? Which would be here. Then into the lowest level lows, right? Then you're looking for a flat print and pull back completely if it's going to reverse, or pull back and drop. Look for the blue tracers, look for the things, look for these boxes trading on top of each other. There's clues to this stuff, but you're not all looking for them correctly. So I just want to keep reminding you. I talk about flat prints probably since I was born. It's what it feels like to me. I'm at an age in my life, right, where I've been an adult longer than I've been an adolescent and a child, and it feels weird, but that's just the way it is. So I've been talking about this stuff, right? When do you become a man, roughly, or a woman? 18, 19, even if you push it 21? Well, I'm way past 21. I'm more than double 21. So I've been an adult longer than I've been a kid, and it almost makes me want to cry in one respect, but at the same time, I've been looking at this shit since 1999. And I promise you, it's exactly the same. It's the same story, the news releases, the saga. Oh, the U.S. is doing so terrible. Gas is through the roof. Pound is gaining strength against the U.S. dollar. And then next week, it goes right back. So what the hell happened? Did price of gas come down? Last time I checked, it didn't. Did anything clean up in the economy? Last time I checked, it didn't. It's the same bullshit. That's why I don't look at the news. The only thing I look at is the releases, so I know what it's going to do to the market and how it's going to affect me. I don't give a shit what those talking heads are saying. If you got that on, like I met people that have like 3 TVs in their room and in their trading room, and they got all the different news channels on. They got CNBC. That shit doesn't mean anything, man. These guys come out there and say, "Oh, we're expecting this," and I talked to the CEO, and he's trying. Man, it's bullshit. You just focus on the charts. Everything you need in this business is on your screen real estate right in front of you. You got 3 monitors, the answer's in those 3 screens. You got 10 monitors, the answer's in those 10 screens. Everything else is irrelevant. You're trading a pattern recognition system where the pattern shows you trap money and where price should go next. That's what you're trading. M to the high, sell. W to the low, buy. Pullback in between, wait for the pullback to show itself. Get a rough estimate where it should come in. Execute on an M or W formation in the proper direction. That's it, man. You know, you want to use harmonics and stuff to help you get some signals, absolutely perfect. We don't trade harmonics, by the way. We retrofit the harmonic into the existing pattern. That might be a lesson for another day, but I've talked about it ad nauseum. The beauty of the harmonics is that you could send a push notification to your phone. So when price gets hit or hits those numbers, fib extensions or whatever, when it hits those numbers, it's telling you that, hey man, this price is 127.2753% overextended. Well, that's interesting to me. That means it took out the high and ran, right? So that's an overextended price. Now I want to look for an M formation from the high side and bring it back in. That price exceeded ADR if it made an extended pattern in one session, one day, in 24-hour period. That's interesting to me. That's an overrun. Exceeded ADR, that's going to snap back for the end of the day. That's something you want. The tools are there, man. Everything's there right in front of you in your screen and in that folder I gave you. If you ain't using it, that's on you. Shame on you. All right, so I don't know. Did I answer the question or did I just ranting tonight? All right, so look. Yes? All right. Okay. So here we go. We're accumulating, right? We expect, look at these lines. Where do you expect this to possibly go? Right? You're going to rattle in between here. This is your Asian range setting up. Very low volume, right? Look at that. One order went off. 7 orders went off. 2 orders went off. Who's doing that? It ain't any dealer I ever met, right? So it's us rattling the market around, right? Us rattling the market around. Asian range, low volume. We're looking for something we can lean on or something that give us our action, right? So between 1 and 4 a.m., we got to get something going. So how do they do that? Change sessions over, right? Get into the shadow box. They're outside of the blue, into the shadows. And then this is what they do. They throw a little tiny bubble, right? Notice the liquidity is all pretty much dried up, and they pop it to the high. We knew these levels, these higher levels would possibly hold, right? That would be your first leg rejection. Do you need this stuff in the book when you see a candle go straight up and end on a wick? You don't need this shit, right? So what happens? They use order flow and volume, right? Anybody short is buy side. I mentioned that earlier. Why do you see green at the top when they should be selling? It's because they're picking up the stops of the people that, all these people, right, that were sell side, all this, plus prior days, right? So how does this get created, right? Black in the book, nothing, nobody's home, right? So they pull the orders or liquidity to create the vector candle. They pop it with a small order. Everything in the book around it dries up. Speed and spread, tools that they use. And it's low volume, typically low volume. When a candle spikes hard, it's empty. I mean, there's orders in it, but it's retail traders. When you think about the candle cut like this, right, and all the cells, the numbers are small, 2s and 3s, 1s and 4s, 20s, maybe a 20 in here somewhere. And then where the bubble is, these orders that are put, I want you to understand something too, real quick, that there's orders in the candle, and then there's orders on the book in the levels. Right? So you have executed orders in the candle and you have orders holding on the book, and they're usually massive, right? To draw price in and to stop it. Stopping volume, right? You ever heard of stopping volume? That would be this collection up here. Stopping volume, insurance. Notice how this level got sold off and absorbed, and this level hold, these 3 levels held. You see that? With a little black space or neutral space in between. Here's 2 ticks of space. Here's 1 tick of space. Block, 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 absorbed. Well, some orders got to get off the book and into the price to make it move, right? Because you got resting orders or pending orders, and you have orders that have to get executed, okay? This ensures that price won't go another tick higher, right? This is the tolerance. That's why, like, sometimes you get stopped out because you got something here and then it bleeds through a little bit, but it ain't bleeding above this. There ain't enough retail traders. These could be thousands of orders stacked depending on the instrument. This might say like 2,200 on the book. This might be like 1,800. Just got it depends on the instrument. If it's ES or crude oil, it's way higher. Gold, this might be like 1,200. Their deal is to, if they already got their objective here in the execution, their deal is to not waste any more money or tie up any more money than they have to. Right? So now what happens? Okay, you got all this stopping volume. Stops are triggered, absorbed. You got some sells going on in here. Price comes down. We can kind of guess where price is going to go, right? Where's the last place it was pushed? Right here. You could draw a zone off of this. You understand? So price turns, comes back. That looks like it's forming an apex nadirite thing where it come from. Right? Notice the volume squeezing down. Notice the volume squeezing down. This is what's going on in here. Right? You got a little bit bigger size coming in. Right? 40, 71. And you're down here, you're dealing 2s, 8s, and 10s. Right? So pull the liquidity, black book, spike right up, stop it, turn it. You notice there's equal number and a little bit more. Look at the red Pac-Man on the bottom versus the green Pac-Man. Okay, stops being triggered. Retail traders jumping in, forcing price lower. Okay, where do we expect a little minor turn? Somewhere in here, right? Somewhere in here. We look at the candle shape, we use the wicks and draw off the rejection areas. But I could tell you that you could stretch these areas from here and you'll get a rough idea where it's going to go off. Okay, large order block in the book, not on the candle. Candle represents stop turning. Buy side, take the sellers out. Right? The book, it's opposite of what you see in the book, and you got to get your head around that. Stops turning buy side to get the sellers to buy them out, and the buyers turning to sell them out. That's what happens. So when you're looking at the dealer stuff, it's going to be the opposite of the retail trader stuff. Does that make sense? They have to buy the sellers out and sell the buyers out. It's the opposite because that's you use the opposite order to get out. So that's why it looks like that. All right, so what happens? It retests into the level and turns, right? I just told you, look, these levels, I wanted you to see the turn. These levels, look, in the book. So this is essentially, you're looking at the top of the Asian range, right? Price broke out, hit the top of the Asian range and went higher. The last place that they were fighting for control, right here and right here. I just showed you that shit on GU in the very beginning of the session. Squeeze it, pop it, stop it, reverse, pull back. This is the developing pattern. Okay, what do we expect? I expect it to return to the level but fail to close above or close in an evening star, get a quick rejection as railroad tracks, right? So we're looking at this, price is returning to the level. Well, I already know this is the high side, right? I could surmise from here and here, which by the way, in all this volume in between would be a pin. You can barely see it, but that's not a pin, it's a marker. But exactly that marker is what the pin would look like on a candle. About like this. Full body, rejection, small inside bars, small bodies. Evening star maybe when it comes back down, depends on what time frame you're looking at. This whole thing up and down could be a set of railroad tracks like this. One bar up, one bar down. Depends on the time frame, right? This would be green, this would be red. Reversal. Then you get a couple spinning tops over here, small little bars like this on this level that look like this. You guys know I suck at this drawing thing. Just hang with me, right? Hammer, this would all be something prevalent in here. You might have one bar outside and everything trading off of that inside the shadow of the other box, in the body of it, right? Inside the body. Right, then you get the reversal back. So you could surmise from the wick, this is where the drawing stuff, this is how I figured out the drawing things. You look at this, heavy volume, the bar closed here, you draw a box on that, and you're like, wow, this guy might be onto something. Okay, so what do we expect right there when it comes back into the box? You can go sell limit right here, right? And you're going to get the turn, right? But if you're waiting for a confirmed M, then what you want to do is you want to wait for the secondary N, right? Somewhere in here. Now I want you to notice, right? This came off of this, right? So this would be the zone, roughly. You want to get a rough idea. Remember, I told you rough idea, refine the entry when it shows itself. Rough idea, refine the entry when it shows itself. Okay? So now we got a turn here, and we know we got volume right here. So there's our next adjusted box drawings. It's the same thing I drew on Asia and showed you at the beginning of the session. Okay? Price turns, makes a low. This took out this. Right? This bounced off the top. This is trading in the middle of it. Roughly, it's very hard to see without the candle prints. So now you have an M, and you're looking for a secondary M, right? This would be the refined entry. In order for this to come down and pull back and take out this level, it confirms a sell side book. It looks a little different on here because it's bubbles, it's not candles. You just have to learn how to look at it, but don't. So now I'm looking for the refinement. How do I refine this entry? I was thinking here, but I got flat print like this, and I have a little arch in it, and it took out the level. So now I want to imagine in my mind's eye the top of this or the top of this. You can draw a box on this whole thing right here like this. That's a box. Steve, that box is too big. No, it ain't. Every line is a tick. 1, 2, 3, 4, 5, 6, 7. About a 7, 8 pip box, right? I usually draw a 10 pip box, and when they're 10 or less, I put the stop to the entry into the back of the box. Okay. Here's your heavy refinement, and this is going to turn in your favor. That's it. That's how it develops. It looks weird in here, but here's the thing. W, exactly the polar opposite of this, right? You're going to get all kinds of orders in here, probably red, right? Just imagine the exact polar opposite of this. A bunch of small bubbles going off, retail traders, small bubbles going off. At the important points, these guys step in and handle their business. That's how it gets moved around, slapped around. That's the structural thing. So when I tell you, you can look at price without pins on it. Take the pins, make the pins the same colors as background. If you're using black charts, make all your wicks black. Go in there and your candle properties, change them to black, and save that as a template and use it as a separate chart. Just look at bodies. And then you see the bodies laying on top of each other, inside each other, shadow. And you'll realize, okay, they didn't trade below that, they didn't close below that body, or in this instance, they closed below that body. That means that they took the level, right? When they look, liquidity, they absorbed a level. Then they pull back. This level held, right? 8, 10 pip box. They came in, rejected it, turned it over. Makes sense? This is what's going on, man. And then you see this go off right here. Anybody that sold in here got stopped. That was trading too tight, 5-minute traders, whatever. Smaller numbers going off in the pullback. Larger numbers going off on the other side, sell side. That's a larger number from there, right? And if you want to wait for not such a refined entry, then it would look like this. It would go down into these levels clean. It would take out both sides of Asia, right? Which is here. And then you would get exactly the same thing down here, a microstructure. And that's how I realized to start following this crap all the way up and down, right? I was telling you, okay, if you go look at GU overnight, even Euro, right? It's like this. Pull back. So every one of these is this, right? I mean, to be a little more accurate, it's like this. Comes back, makes a little micro M, gets through the level, makes a little micro M, gets through the level, makes through a little micro M. My M or V, right? In a down cycle, it's literally the daily pattern or the weekly pattern in micro form, fractal. So you could take the M formation high trade, get the stop out in front, scale in here, right? And you know that if you're a 5-lot trader, you go 3, 2, 1. So you have a weighted position, more lots at the higher price. So if this retraces on you, it can't cancel out all the good that you did. So you could take 5 lots at the M, get the stop out in front. That money is now block margin. It's protected. You can't lose, maybe down to +1 or 2, right? Maybe you let the first one fall through, so you get separation on the 5-lotter, leave the stop there. Then you add a 4. Then you can add a 2, or you can add a 3, 2, 1, all the way to the end of the run. Be careful of the L2 pullback because it'll take these 2 orders out. Right? If you got a 30 pip leg, right, you know that there's 3 impulse moves, and then in between there's pullbacks, right? This one pulls back about 50%. So this, you got to be careful of that pullback. So if you go level 1, L1, L2, right, and you got your order off your M formation here, 5 lots on, then you go 3 lots, 2 lots, and when you get into the turn, possible turn, you bracket that up. When this V or M fails, take your trades off, close it out. And that's how you ramp up your equity relatively quick. Listen, it's all in how you work it, man. Some people think 10% a week is great. Some people think 50% a week is great. I could tell you there's guys doing those numbers and more. Once you see a pattern and it develops and it's in front of you and it's been developing for 2 or 3 days, you beat the shit out of it. It's there. It's going to happen. I promise you that exact same thing will happen again. Go look at my Facebook feed and my Instagram. It's in there from years ago, from months ago, from days ago. It's in there. Same thing. Higher level longs get trapped. Lower level shorts get trapped. They got to do something. They got to pay. Make somebody pay. All right, man. I'm going to wrap it up. I went longer than I wanted to always. I want to try to get you guys out of here 45. It's 54. I will see you next week. Happy 4th of July. Give yourself a break over the weekend. Hang out with your family, man. All right. Spend some time. Throw some burgers on the grill. Go to a park. Get some air. Do something. Get away from the screens, man, for a couple days and get some air. It's beautiful out. It's been beautiful out. It's getting warm, though. All right. See you guys next week, man. Thank you.